Hey, happy Thursday. Hope you're doing well. We have officially kicked off earnings season, and we have a lot of housing data to cover. So we're really going to spend a lot of time on those kind of two key areas here for this week's market update. My name is Brandon Steele. I'm a financial advisor with Mainsail Financial Group here in Bellevue. And our goal every week is to bring to you the news, the data, the trends that we're watching, and hopefully weed out a little bit of the noise along the way. As I mentioned right out of the get-go, the biggest thing is that earnings season has officially kicked off. And what this means is that there's a period of a few weeks where the companies report their earnings, their sales, their profits, all that good stuff. And so far, early on, so far things have been pretty dang good. Most of the companies have beat the expectations. However, you might not think that if you're following the news, because all they have really covered is this terrible earnings from Netflix. And rightfully so, to some degree. I mean, the earnings report was extremely bad. And quite honestly, this Netflix earnings report affects a lot of people because, number one, a lot of people own it individually. But number two, if you own a broad index, for instance, or that's like entirely your portfolio, let's put it that way, and you're not necessarily diversified from that perspective, this is a big portion of a lot of those indexes. Big tech is a huge portion of most of those index, like the S&P, for instance. So it's affected things for sure. In fact, I think Netflix was down, 40% maybe the day after they reported earnings. But all that said, again, that is one company at the end of the day. Now, it does have impacts, but again, most of the earnings we have seen so far have been pretty dang good. Now, it's way too early to say that this is what's going to continue to happen. We're still early on in this season, as they call it, but it's definitely something to keep an eye on and hopefully continues moving forward. In fact, I think Tesla reported today and showed stronger profits than expected. So a good example, right? I think the key here, which we'll spend some time on in our question of the week, so stay tuned at the end, I think is really important. We'll talk about what we watch for when we look at, earnings season. Before we get to that, a lot of housing data has come out recently as well. So we had building permits higher than expected and basically in line with last month. We had housing starts, roughly the same idea, 1.79 million, is higher than expected, the same as last month. And then we had existing home sales down slightly at 5.77 million. So the question, of course, is will this continue? And I'm curious if you guys may have any ideas as to why maybe we've seen a slight tick down in home sales. Part of it, potentially, could be that we've seen this giant increase in interest rates. So believe it or not, the average mortgage is somewhere over 5%, I believe, right now. And looking back just 3-4 months ago, we were closer to 3. So that may not seem like a big jump, but I mean, it's almost double, right? And at the end of the day, that difference between 3 and 5%, when we're talking about a mortgage, can mean hundreds of thousands of dollars. And so the impact of interest rates can actually price a lot of people out of the market. I'm not saying that's the only reason that we're seeing this or that is the direct reason, but it's something definitely to keep an eye on. And especially as we look forward and start to kind of gear up for the next Fed meeting, it's something to really pay a lot of attention to in the coming months, especially, right? So speaking of, the Fed released their beige book on Wednesday. What the biggest thing I'll share with you from that is that it seems like a lot of the market is now expecting not only a 50 basis point hike in May, but also the next meeting, which I think is July. It could be June, but I believe it's July. So now we're talking about an extra 1% increase in the interest rate in these coming few months, on top of what we've already seen, this giant spike in interest rates year to date. So this is really important, something really important to pay attention to. For those who remember from a couple weeks ago, we talked about the inverted yield curve. I think part of that is because the Fed has kind of artificially kept things down. And so as they raise that even further, it will be really interesting to see what happens with the longer term side of the yield curve. In other words, maybe 10-year bonds, for instance, and how they react to these Fed decisions coming up. Today, we had initial jobless claims come out at about 184,000. Nothing really to spend too much time on here, but this is the second week in a row where that number is going the opposite direction. We're hoping for very strong jobs data coming out here in these months, and we're not seeing it over the last 2 weeks. So hopefully that reverses and we get back on track here. Coming up, before we get into our question of the week about what to watch for in earnings, next week we have consumer confidence, new home sales, so we'll follow the housing data, and GDP numbers all coming out. With that, before we break today and start looking forward to next week already, we have a great question of the week, which is basically, okay, we're here in earnings season. What the heck do we watch when we're paying attention to these earnings reports? And I will share with you that, of course, we watch the current numbers. We watch the profits, we watch the earnings, we watch all that good stuff, which is a great indicator of what's happened. That said, and I think especially this earnings report is really, or this earnings season, excuse me, extremely important to watch guidance or the outlook that these companies are sharing. Now, some offer that, some do not, most do. And I think that is something really important to pay attention to in the coming weeks here as we roll our way through earnings season, is to really get a sense of what these companies, these CEOs are really watching. Are they investing? Are they concerned? Do they expect their sales, their profits to continue to grow? Or do they expect that actually may slow down, right? You'll hear a lot of that when you pay attention to the guidance in an earnings report. And especially for where we are today, this is something that I think carries a lot of weight heading into this next quarter, Q2 of 2022 here. Again, I expect that this trend of good earnings will continue for last quarter, but now we're really focused on, okay, as we look forward and some of the impacts of the war and the higher interest rates and all the stuff that are a little bit of a headwind to the markets start to actually work their way through, what are companies seeing and what do they expect for the year to come? So hopefully that's helpful. I promise you we will be paying very close attention to the earnings over the coming weeks and share with you some things as they come up. But next week, we'll touch on consumer confidence, new home sales, and GDP. So definitely tune in next Thursday at 3. And if you have any questions for us, anything on your mind as you're watching the markets or hearing any news stories, definitely reach out. If you have a question and we cover it, I will happily send a copy on me for a great question of the week. So don't hesitate to reach out with those, and hopefully we'll be able to cover your question in next week's session. Have a great week, and we will see you next Thursday at 3.